The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9:06 a.m. Tuesday morning. We got about 25 minutes to go until the start of trading, and we got markets in positive territory with the S&Ps sitting within 1% of all-time highs. 42.05. We're positive by 12 points right now, trading at 42.05. You look, it didn't take long, folks. You back things up to May 19th. You're talking about 6 days ago, okay? You're talking about last Wednesday. You had the S&Ps trading at a price point of 4,055. You were exactly 150 points above that price level in no time, and we're sitting now just 33 points from all-time highs on the futures of 42.38 as we look for the opening bell. NASDAQ up 62 points, 13,000. We'll call it 13,700. We're right up against that level. The high is about 350 points higher than that back on April 29th. You're looking at a Dow, 34,421. Easy to remember the high on the Dow, a 35,000 print to the tick, and the Russell up about 7 points right now, trading at 2233. Russell been chopping around really almost in this area. You back it up to January 25th. You had a high in the Russell of 2192. So you're talking about 40 points away from that level right now that we've been chopping around in the Russell, consolidating near all-time highs, 2233. This morning, crude backing off a bit, but just even in the last few minutes, catching a little bit of a bid. We had crude at $8.45, trading at $65.59, and just like that, we're back above $66 in crude. Higher prices coming at you in the pump in a big way. Gold down $2 at $18.82 this morning, and we'll jump to notes and bonds as we got a yield in the 10-year of just under 1.6%, basically sitting right at 1.6, but 1.595, I think, is what we're sitting at exactly. The 10-year is up about 2 ticks. You got the 30-year up 7 ticks right now. And how about the VIX? Volatility index this morning sitting at 1835. Not that long ago, we were sitting with almost a 26 handle in the VIX. Not so much anymore as volatility gets sucked out. The expression goes, sell in May and go away. We're coming into a long weekend coming up, a 3-day weekend. It is Tuesday. When does the market really begin to trail off? We have a VIX that's pretty elevated right now. When you think about, we got an 1835 VIX right now. We're coming into a long weekend to kick off summer trading, and we have the S&Ps with continued strength sitting basically at all-time highs. I mean, you were up above this level on 2 days, May 7th and May 10th. You traded higher on May 7th. We'll zoom in on the action. That high, we're looking at 42.32. You trade up barely on the next day, so 7th and 10th. We're going to put this on a 20-day hourly to really see the run there. There's your run on the 7th, right? You accelerate towards the end of the day. That Monday, we started to give it all back, and now we've climbed right back towards that level. You're talking about sitting at 42.05 in the S&Ps. Okay, what else we got going on? Jumping around to some of the stories. Let's start off with some of the FANG stocks. We're going to jump to Amazon. So Amazon, disclosure, I have some Amazon. Everybody kind of has some Amazon if you own any type of equity fund in any way. Amazon, you're talking about a company pushing $1.6, $1.7 trillion valuation. We're up about $25 coming into their open. Now, interesting article I had up here, Amazon. The streaming wars continue. Talk about just like a nonstop action, right? Last week, we had AT&T and Discovery. They're spinning off an entirely new media company, combining those two assets. Amazon, they're looking to acquire MGM to come as soon as today. This news was reported, I believe, last week. Yes, first reported last week, as they say here. $9 billion is what they're looking at for the studio MGM. Now, not to confuse MGM, the studio, having nothing to do with MGM, the casino. But $9 billion, not really much when you think about Amazon and what they have at stake. The streaming portion of Amazon Prime, it is interesting. A lot of value to the consumer, but really a very, very tiny portion of Amazon's core business, right? It's one aspect of Prime that they bring people into, as opposed to a company like Netflix or even Disney, as they turn into, that it's the sole purpose of their company. Netflix entirely. You get to Disney. One of the reasons why I love Disney so much, we have Disney in my newsletter, is you have the streaming assets of Disney Plus, but you also have the parks that aren't going away. I'm about 45 minutes to an hour away from Disney World in Orlando. And of course, you have the movie theater business, as in pushing out big blockbuster films. Not quite Netflix's business model. I assume Disney is going to try and keep that somewhere in the realm, but they are turning into a streaming company. Nonetheless, they'll still have the parks. But Amazon, $9 billion. So it's James Bond, one of the biggest films that would be in here, and you could really see them try and turn this into a franchise. Nonetheless, interesting when you look at the players in this and how everything's consolidating. The deal between AT&T and Discovery, talk about a reaction from the markets. This was announced last Monday morning. So you go back, I mean, amazing. You're talking about 8 days ago, folks. A lot of analysis last week was saying, man, quite a week with everything going on, that it's amazing that was just last Monday. But you see the reaction in the market, and Discovery, much the same. Quite a decimation in that stock. Discovery, I have some Discovery and a small portion just for retirement and a long way. It's really pulled back in a substantial way. I mean, at some point, this is going to be some value here. Talk about a parabolic move. You really were sitting coming into the year at about $30, and we basically almost made it back there yesterday. This morning, you're a little bit higher on Discovery, up to about $31.50. We'll pull up Disney. Disney numbers. You pull back the entire run that began in November when the market really began to accelerate higher. You were trading at about 120 on Disney. You trade up to 203 on Disney shares. Just like that, you pull back to basically a 382. We'll back that out again so we can see the pop. We've popped a bit on Disney. We were down to 167. We're sitting at 174.31 right now. You have all-time highs of 203.20. Probably going to bump up against this area of 182 would be the next stop on Disney right now. As I was saying to my newsletter subscribers out there this morning, that was an area, number one, correlates to the high you have coming in to the new year at about what is that high exactly? 183.40. Okay, that's a potential B point as we've accelerated. You've chopped around. You did trade down lower, but you can see how often that area was support when we were above that area, about 182.57, call it 183.40, the highs back here. That area could turn into a little bit of resistance. That would be the next stop for Disney, 182.57. We'll pull up Netflix as well. Speaking of streaming, Netflix really disappointed on their last earnings. They led the way. They beat Disney in terms of coming out with their numbers in a miss ahead of Disney's numbers. And, you know, this box will activate the drawn. It's a consolidation in Netflix right now. And not surprising, folks, when you look at these bounces, right? You get in these big consolidations. If you're looking to add to the portfolio, if you're ever considering selling it, not a coincidence that Netflix continues to bounce at about the 480 area. We're sitting at 502 this morning. We're going to open at about 505. The upside of that pushing probably about 575 to 580. We did climb to 593.29. That's 2 earnings seasons ago. But man, talk about filling the gap, right? We trade up to 593. You go 3 months and it gives it all back on their last earnings when basically you just had pulled forward the growth that they were looking for and a big miss on the numbers for Netflix and for Disney for their thought in terms of the expectations for subscribers that were going to be added to their subscriber base. All right, jumping around to see where we are. We got about 15 minutes to go, and you get the S&Ps melting up a little bit. We're up 13 points right now at 42.06. Over in Europe right now, you have the DAX trading up about 0.5%, FTSE barely negative. In Asia, you have the Nikkei up about 0.6%, Shanghai up about 2.4% overnight in Shanghai. All right, folks, stay tuned. We'll be coming back. We'll be talking to our man, Kevin Hinks. We got earnings season going on in a big way this week. As I mentioned, so today after the bell, we got Nordstrom's, we got Toll Brothers, we got Urban Outfitters, and we'll be talking to man Kevin Hinks from Fast Market, TD Ameritrade Network. Stay tuned, folks. We come back right after the break.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got about 12 minutes to go until the opening bell. Jumping around to some other stories going out there. So Moderna, following the footsteps of Pfizer, expected, but the news comes that it looks like their shot is effective in teens, opening the path for clearance. The company is going to submit for regulatory authorization in early next month. Shot was 93 to 100% effective in study to 12 to 17-year-olds for COVID. Good news there. Moderna trading a little bit higher on that news. I was going to jumping around to some of the stocks that are trading this morning. Interesting one on the airlines, talking about the economy. So United said in an SEC commission filing that ticketed yields have accelerated during the second quarter ahead of prior projections. All right, this is an airline updating ahead of prior projections. Good indication of people getting back to travel, getting back to the economy. It now sees the key metric of revenue per available seat mile. So get that one for a second, because it's an important one. They talk about it a lot. It's the revenue per available seat mile. So for how many miles each seat is traveling, how much revenue are these airlines pulling in? Okay, that is, of course, going to incorporate empty seats, right? You got empty seats, you're not filling seat, your revenue per an available seat mile is going to be decreasing. They were looking for that estimate to be minus 20%. You're now seeing a number of 12% for a decrease, and as you'd expect, we have the airlines trading higher on that news, from about 56 to 58 on United. Delta higher as well, coming in from about 46 to about 47.50. All right, folks, let's jump over to our man Kevin Hinks. Every trading day, 11 a.m. Eastern time, Fast Market on the TD Ameritrade Network. Kevin Hinks, Alex Coffey, and the team breaking down the markets, breaking down hypothetical option trades, walking you through trade management, rolling, risk-defined trades, the whole deal. We got earnings season going on. We got the markets near all-time highs. We got a long weekend coming up. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. Yes, we do have a long weekend coming up, thank goodness. But, this week, as we look at it in its entirety, is a very back-weighted week in terms of economic data, in terms of earnings. We're in kind of a lull here before the pace of the market picks up. Thursday and Friday, we get a bunch of economic data, GDP, durable goods, personal income and outlays on Friday. We just had some really good Redbook data. We just had some really good housing data come out. So we'll get consumer confidence at 9 o'clock. But all in all, I think this market is drifting, Tommy, into, later in the week when some real numbers come out, some numbers on inflation, some numbers on, like I said, durable goods. So I think this market is, and everyone, your viewers should understand where we are on the calendar and moving towards the holiday weekend and then into summer trading. So everyone should not lower, but adjust their expectations for these markets.
It is interesting. We get some big economic numbers coming late in the week at a time when we get a long weekend coming up. And it almost feels like, Kevin, to myself at least, that like this is kind of the first weekend that we got a nice big long weekend, right? Vaccinations have really taken a hold. People might have the opportunity to get together with family members, really get out and enjoy it in a big way. And maybe that, if you weren't waiting for those economic numbers towards the end of the week, it might even accelerate. We're all able to work from home more so than we usually have been. So maybe you can sneak out of the office a little bit sooner. But as you mentioned, we got some numbers that we're waiting for. It'd be interesting to see how that plays out for the week. So markets, I mean, it's interesting, Kevin. I want to ask you real quick because we'll talk about, of course, we do have some earnings coming out this week with some retail stocks out there. You have an S&P right now sitting at 4206. I got a high print of 4238. You're only going back, a few weeks in the S&Ps right now. And you have a VIX still, Kevin. And, of course, we're coming out of, a pandemic like nothing else, man. We're still missing millions of jobs that are underemployed from a year ago. But I was trying to wrap my head around this morning that it seems like in ordinary times, and we're not living in ordinary times, right? But you have a S&P within 1% of all-time highs, right? We're coming into summer trading. We're coming into a long weekend. And you still have a VIX pretty elevated from where we are. Now, we were just sitting at 26 last week, but still 1829 with everything I just talked about. Markets at all-time highs, long weekend coming up, right? May trading, summer trading out there. What do you see when you look at a VIX right now of 1829, Kevin, with this market?
Well, what a 19 or a 20 VIX, which it just came down from yesterday, now 1829 to start the day. It's still historically at an elevated level, Tommy. I mean, the all-time average for the VIX, once it went to the S&P 500, is about 15.39. So we're still, think about it, several points higher than that. So that is still, now we've come down from some pretty historic high levels, but we're resting now above where we normally would be at this time of year. And I've seen VIX, put up a 3-year chart of the of the VIX contract over the last 3 years. You could see some 12s and 11s and 10s in there. So sure. We are, for where we are on the calendar, this is, make no mistake, an elevated level for implied volatility.
And, folks, that translates to premiums. That translates to the option market. It's something you always want to be considering. And with that in mind, Kevin, we do have some companies still. We're tailing off into earnings season, but it's always surprising that we're tailing off into the season. But I pulled up the week ahead, and we still got some numbers, some pretty decent, well-followed companies coming out with their numbers this week. What are you guys going to be talking about on the program today?
Yeah, today like Folio will do their presentation on J.W. Nordstrom. That stock has had an unbelievable run as the recovery continues. Then we'll look at Toll Brothers, and then we'll look at Dick's Sporting Goods today.
Three of my favorites to look at, man. They've been some big movers like you talked about. I mean, Dick's Sporting Goods, early on in the pandemic, Kevin, they really, just in my own personal, I remember I was buying sneakers when things first were falling apart, right, where everybody's trying to manage life in like last March or April. And they really spun things around where I was doing almost like I was picking up an Outback order with curbside delivery of a pair of sneakers from Dick's, where they just walked it out of the store, didn't even have to get out of my car. And I got the chart up here, man. You go from $50 to $13.46, folks. And since then, we just made an all-time high at $91.80. That's a couple weeks ago. Well, Kevin, I'm going to pull it up before I let you go. The Analyze tab, the Thinkorswim platform, we're looking at a $5.90 move, folks, on Dick's. They'll be talking about Nordstrom's as well on there. And what was the third one, Kevin? What do we have?
The third one that we were talking about is Urban Outfitters. Oh, I'm sorry, Toll Brothers.
Toll Brothers. There we go. Shame on me with housing. And that housing number, man, huge number this morning to add to Toll Brothers coming out as well. Well, Kevin, we look forward to the program, man. We appreciate the education as always, and we'll talk to you tomorrow.
Thanks for having me on, Tommy. Have a great day.
You too, Kevin. Thanks, man. Folks, tune in 11 o'clock Eastern time every trading day. I watch it myself. I've learned a tremendous amount about options, risk reward, defined risk, premium, implied volatility, the whole deal. Check it out today. And it is interesting when you look at, you always hear that 9 out of 10 companies in the S&P might have reported, et cetera. But we got some big numbers out here still coming out. We got Nordstrom. Taking a look, we're right back to where we were prior to COVID. They're looking at a move of about $2.88. That's a decent move when you're talking about a $37.55 stock. They'll be out with their numbers after the bell tonight. And Toll Brothers as well, about a 5% move being priced in for Toll Brothers on their earnings after the bell tonight as well. Okay, folks, stay tuned. We'll come back for the opening bell. We got S&P up about 11 points right now. Interesting when you look at the action, when you pull it up on a daily, right in the middle of that channel line. But, man, it is pretty well defined, folks, and it is an upward channel line. And I see hard press coming into a long weekend, especially this long weekend. Even at a long weekend like this one, it feels like, the goal is July 4th, right? Everybody get out. But, man, if you're around people that have all been vaccinated, you're safe, it's time to get together, which is a beautiful deal. Everybody else? You got to get vaccinated, get over that hesitancy, get back to life. But Memorial Day is coming. Stay tuned.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need a stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We got S&Ps up about 11 points right now, 42.05. NASDAQ 100 up 62. The Dow up 70 points and the Russell up about 10 points right now. Jumping around to what else we got going on, let's jump down with some of the equities on the move. We got some upgrades, we got some downgrades. We have Canopy Growth, the cannabis. They are positive this morning after MKM Partners upgraded the stock to buy from neutral. Sentiment surrounding the stock is so low that the current risk-reward profile is very favorable. I would agree on some of these cannabis stocks. And look at that pop on the open. You got a 5% pop right now. Now, we've tried to enter this equity in my newsletter. Lost a hair amount, okay? And you're going to get some volatility in these. Plan on trying to get back into it. This might be a little bit of a run. To put up Canopy on a chart of the 3-year, was looking maybe for a pullback of this bar that you got the week of November when things really started. You're talking about a low of $18.32. Seemed to be $20 might totally be in game, but that might be it. That might be the run. You're talking about we traded back the week of November 9th, 22.53. You can see pretty much ticking across at those lows there. This morning, though, you got Canopy, and it's continuing to run on that upgrade. You're talking about now up 6% on Canopy, trading at 24.02 on that upgrade. Maybe the market waking up to that pullback being a little excessive. We got Shake Shack. They're up this morning after Goldman Sachs upgraded them to buy from neutral. They believe kind of similar territory. We've seen some real pullbacks in some of these equities. Recent pullback presents a buying opportunity given Shake Shack's strong balance sheet, favorable long-term growth prospects. Additionally, Wedbush upgraded the stock to outperform from neutral, citing similar reasons. I'll get it out of my mouth. And there's a pop for you, 9.1%. You put this thing on a 3-year weekly. That's what we're talking about. I mean, this stock just basically went from 140 to 80. You're talking about more than a 40% pullback. You pulled back right to where you were prior to COVID, and you always got to keep these spots on your charts, folks. When this thing's falling out of bed, right? Let's just put it on a 5-year daily and zoom in on the action we got in terms of COVID. So we have COVID begins in February, really, of 2020, as we're all aware. But it's not a coincidence, folks. When this thing's falling out of bed, right, and you're saying, where could we maybe find a bit of support? The area is going to be coming into this area. That's an area that was huge resistance, as in we went up there, cascaded lower. You have a whole gap that we're into as well. You make it to $80. Doesn't mean it can't go lower, but if you're looking to trade into some of those equities, always a nice area. If it's a short-term trade, you just put your stop right underneath it. You look for a pop. Nonetheless, that's quite a move on some of those upgrades. 2 of them, 9.2% for Shake Shack. You put it on the chart, though. As you can see, we're just basically back to barely what we were trading at 2 weeks ago. On May 11th, you were as high as 91.14. Okay, they come out with their numbers back in early May. You trade lower. So, yeah, we're clawing back some of those losses. But, man, anybody who's been in this equity since about January 12th, outside of the last couple of weeks, is still in negative territory for Shake Shack, but higher this morning. And we get the markets rising. S&P's up about 16 points right now. AutoZone, they're out with their numbers, big numbers in a big way. How about $26.48? Now, they're trading at like $1,500 or something, $1,700. Where are they at? $14.52. They're up 0.3% on their numbers. There's a 5-minute chart. $26.48 a share. Market was looking for $20.14. I wanted to bring this up for the same-store sales. Comp same-store sales surged 28.9%. Now, remember, this is comping against last year. Not sure AutoZone was doing big business as the whole world shut down during COVID. I would much rather see some of these numbers versus 2019, but nonetheless, it's all about expectations as well. They were only looking for 17.1. They come in at almost 29%. Gross margins dropped, though, due in part to an acceleration of the company's commercial business. So they're not making as much commercially as they are retail. That would make sense. Nonetheless, this morning, you're basically flat on AutoZone, trading at $14.50. You back it up on this equity, though. Man, talk about a rocket ship. You come into COVID at a price of about $11.62. You make it down to $700, and just like that, we're sitting more than double off the lows we had. And just look where we are even this year. Start the year at $1,200. We're almost up 25% from that price. We're trading at $14.45 on AutoZone. Amazon, we talked about. Maybe you might see the news break today, potentially, of the MGM studios. Don't expect a huge reaction in that. Prime viewing, Prime movies, Prime streaming, not a huge portion of their business, not going to define whether Amazon's worth $1.6 or $1.7 trillion. Nonetheless, Amazon, understanding that they need to join the party and consolidate in order to compete in a market that's continuing to consolidate. You got to be a big player to compete. That's what's happening. And you're seeing it happen even with somebody like Amazon. We talked about United. So Live Nation in the same way. following the airlines, following Live Nation. They sell tickets. You had the president of Live Nation, Joe Berchtold, told CNBC's Closing Bell that concert revenue bookings rebounding. It expects a better year in 2022 than it had in 2019. There's a comparison I like to see, right? That's what you want to see, and it should make sense, folks. Because, man, if you can't sell concert tickets in 2022 after we've been locked down for a year, then you're in the wrong business. But good to see that that's actually going to happen. We were trading at 74 coming into COVID. Live Nation right now, you're up 0.5%, but look at the run we've had. From $21 when we didn't know if live events would happen ever again, exaggerating a bit, but we're sitting at about 92. And check this thing out. You put it on a monthly. I mean, you're pushing basically almost all-time highs on Live Nation. We were trading only at $20 back in 2016. You come right back down to that level, and just like that, we're at 92 right now on Live Nation on their expectations for a better year next year than it had in 2019. Petco, they announced the secondary stock offering. So they're selling stockholder granting underwrites the option to purchase another 3.3 million shares. So let's see, secondary stock offering of 22 million shares, with the selling stockholder granting underwriting options to purchase another 3.3 within 30 days. Nonetheless, they have an offering. Petco, WOOF is their symbol, and as you expect, they're down about 3.5% on a little dilution. You put this thing back. They went public, I believe it was back in January. Let's put it back on a daily. And yeah, we're just chopping around basically in this consolidation. Interesting that they go for that offering, pushing out shares to the public. I mean, you go public in January at a price level you haven't even seen yet, and all of a sudden executives are saying, let's sell more shares into the public at this price level. Not the kind of strength you want to talk about. And Alaska Air, continuing airlines, boosted its cash flow outlook for the current quarter, saying it now expects positive cash flow of $550 to $650 million compared to prior projections of $450 to $550. So they're adding $100 million in cash flow, improved travel demand, as well as better than expected Affinity card inflows, probably their card. But guess what? They're lower. They probably said more than that. Alaska, well, what are they? They're basically flat right now. ALK? Yeah, there it is. 69.25. Not sure why that's not showing a positive negative. I guess it's just technically flat. Yeah, there it goes. Flat, 69.21. But let's check back in on some of those airlines because quite a pop. You got Delta right now up 2.8%, putting it on a daily, and even I'm going to put it on 3-year weekly to see some context of where we fell out of bed. Delta's up about 2.8%. United up about 3.2%. Some of these airlines really have some ways to go until they make it all the way back to their pre-COVID trading prices. You got American at 23. They're up 2.8% versus the domestic airlines are already there, if not higher. JetBlue's up 2.5%. Same deal on increased airline news. Love, Southwest up about 1.2%. All right, folks, we got the S&Ps up about 12 points. Pretty decent open, just sitting where we kind of were sitting all pre-market action. S&P's up 12. You got the NASDAQ up 53, NASDAQ 100, and the Dow up 105. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
There we go. I'll get my mic open. We'll start that over again. S&P is up about 12 points. Going to jump to the home prices news we had at 9 in the morning. Home prices surged most since 2005, fueled by low rates. Said probably a little bit more than low rates going on in the home market. That, of course, putting a bid in it, though. Home prices surging the most since the end of 2005 as a shortage of properties to buy fueled bidding wars. Nationally, you have the index of property values climbing 13.2% in March from a year earlier, the biggest gain since December of 2005. Now, what's interesting here is everything else in the market is comping against some base effects that are pretty ridiculous, in lack of a better term, in terms of you're comping out this quarter versus last quarter. You're comping out this quarter at a time when the market is accelerating and opening back up, compared to last year at a time when you had us all going into restrictions and lockdowns. So it's not quite a fair comparison many times, but look at the rally in terms of the prices, folks, 13.2%. But man, it's not like this number ever came even close to negative. It basically was at, when you go into where we were, you're talking about you were at a level already in positive growth, and now we're comping at 13.2%. Home prices in 20 U.S. cities gained 13.3%. So you have nationally the whole number 13.2 from a year earlier, the biggest gain since 2005. Well, an ominous deal in terms of where we went to 2008. Not sure this scenario is anything like what we had going on back in 2005, though. Home prices, as I mentioned, in the 20 U.S. cities gained 13.3. That's the biggest jump since December of 2013. So big numbers across the board. The biggest numbers, Phoenix, 20%. San Diego, 19.1. Seattle, 18.3. Where's Tampa? They got to be up there. Tampa prices are rocking, folks. St. Pete, it's rocking in a big way. Florida, real estate market, just in a good position in terms of trends, societal trends going on. Florida, very well positioned across the board to pick up some of the flow of people that might have a little bit more mobility than they had prior to coming into COVID. All right. How about this story? My dad emailed the story to me last night. I was taking a look at it. Staggering stuff when you look at the brace of the debt that China has going on right now. So China braces for 1.3 trillion maturity wall as default surge is the headline, okay? Even by the standards of record-breaking global credit binge, China's corporate bond tab stands out 1.3 trillion of domestic debt. Here's the key, folks. Payable in the next 12 months. That's what's due in the next 12 months. The next 365 days, they got 1.3 trillion. That's 30% more than what U.S. companies owe and 63% more than all of Europe, and enough money to buy Tesla twice over. What's more, it's all coming due at a time when Chinese borrowers are defaulting on onshore debt at an unprecedented pace. Really interesting article when you look at it. So maturities, talking about June to December of this year, is in the black. You talk about June of this year to May of next year is in the pink, and you can see how China comes in at 1.3. That number, when you look at the full deal, they almost have a full trillion that's coming due by the end of this year. You go to the U.S., we're looking at a level of about $1 trillion of debt coming due over the next year versus about $600 billion over the by December, and all of Europe is only at $800 billion over the next year and $400 billion through the calendar year 2021. And what really adds to this, okay, and it just might be some volatility in China. Not sure it's going to really impact our markets, but it's a substantial level of debt. And you're going to see if you're in that market. I am not, but you'll see. My expectation is you're going to see some defaults because China is beginning to allow some companies to fail in an effort to make sure the ones that should succeed will benefit the most. So you have average corporate bond maturities have increased in the U.S., Europe, and Japan. They're getting shorter in China as defaults prompt investors to reduce risk. So defaults are rising, causing shorter durations, which means that you owe more money in the near term. And for companies that are struggling, that's going to force them to default even quicker, right? They don't want to push out that debt. The market's not going to let them because they're a higher risk. They're going to keep the duration short. And if the companies can't keep up, they're in trouble. Domestic Chinese bonds issued in the first quarter had an average tenure of 3.02 years, down from 3.22 for all of last year, on course for the shortest annual average since they began looking at the data in 2016. Getting shorter, there's your duration. 2016, you were talking about average maturity of 3.8. This combines everything. Now you're down to 3. The market is saying, no, we're not going to be selling you long-term debt anymore for these companies that might just be zombie companies, barely able to operate outside of this level of debt that they're servicing. Onshore defaults have swelled from negligible levels in 2016, so negligible levels of default in 2016, to how about $15.5 billion for 4 straight years it's been in excess of. That milestone reached again last month, putting defaults on track for another record high. The resulting preference of shorter dated bonds has exacerbated one of China's structural challenges, a dearth of long-term institutional money. Even before authorities began allowing more defaults, short-term investments, including banks' wealth management products, played an outsized role. And they just talk about here that Chinese authorities have been taking steps to attract long-term investors, including pension funds. The government has recent years scrapped some investment quotas and dismantled foreign ownership. But even as they gain traction, it's not clear Chinese companies will embrace those longer maturities. They're not going to do it if they're defaulting. And what's going on is you have China here basically allowing some of the companies to fail, which was not always the case, okay? But they understand that, here we go, the move towards shorter maturities. Investors are increasingly rethinking the widely held assumption that authorities will backstop big borrowers amid a string of missed payments by state-owned companies and a sell-off in bonds issued by China Huarong Asset Management. So they're re-questioning everything. China just kind of playing a new role that defaults are possible. You're seeing it in the numbers. You're seeing the duration shrink, and you're seeing that they got $1.3 trillion coming in the next year that they got payable for those companies. It'd be interesting to see how that shuffle moves along. China's going nowhere, folks. The businesses are going to go nowhere, but I think that they understand that they have enough players in the market at this point that they don't have to support everybody anymore. China doesn't. They have enough going on in China that they can allow some of the lesser successful companies maybe to default because they're not going to be the success of their future. China's seeing they're going to reward the companies that are benefiting the most, that can survive on their own. And with that will come more market capital, I think is what they're seeing there, and maybe a longer term maturity is what investors will be willing to do if they really think that the market is more fair. It's never going to be completely fair in China, folks, right? China, they run the whole show. But if investors really feel like, that they're not propping up bad companies and the market's able to speak whether a good company or bad company is going to pay off their debts, you might actually have more more economic activity come in. All right, and just like that, we got the S&Ps up about 6 points right now. A little bit of a sell-off going on in these markets, though. You can see it on the chart. We're under 4,200. You get the Dow hanging on to gains. We're up only just 5 points right now in the Dow. Tech stocks still hanging on to gains, up about 1/3%. And you just had the Dow go into negative prices. Now, how about the Russell, though? Look at that divergence. Russell accelerating higher. We're up 0.8% at a time when we get the Dow flat. S&P's up by 4. Stay tuned, folks. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, and we get some action. The day is young, as Mr. Basil Chapman would say, coming up next. And right now, we got the S&Ps up by 3 points. Check out the move we just had in the Russell. I put it on a minute chart. You trade from 22.34. We gained 16 points to 22.50, and just like that, we're back to 22.35. To show you the sell-off we've had in the S&Ps, you're talking about 13 points we've had since the market opened. We're up there at 42.10. You just made a low of about 41.96. Tech stocks pulling back as well. Tech stocks probably the strongest right now of the 3 indices. Wow, the Russell's still hanging on to about 10 points. But, man, quite a pullback you just had in the Russell. You have the S&Ps right now up 3 points, and NASDAQ 100 up about 0.2% with the Dow basically flat. Jumping around to commodities, gold's up $1 at $18.85. We got crude right at 66. And Bitcoin But man, it'll only stable until the next Elon tweet. We got Bitcoin trading down $2,000 at 37,725, and we'll check in on notes and bonds as we end up the program. Look at that move, folks. We got higher prices right then. We got the 10-year up 6 ticks now, and that's going to correlate. We're looking at a yield right now. We're above, 1.58%, just like that, 1.58%, the yield in that 10-year. Let's jump around to some of the stocks that we'll be looking at in terms of coming out with their numbers tonight, I believe it is, right? Yeah, Nordstrom, they're down about 0.1% coming out with their numbers after the bell. Talking about Toll Brothers, I believe. Are they coming out? Where are we? Jump over this tab. They sure are. Toll Brothers coming out with their numbers. Nordstrom coming out with their numbers as well. And checking back in on some of the stocks I talked about, in particular the airline stocks, holding on to the gains. American up about 4%. We had Canopy trading higher by about 6.5% now. And AutoZone on their numbers flat right now at $14.50. All right, folks, stay tuned. We got our man Basil Chapman. He's coming up live next. We got some market action in a big way right now. We'll see where we go. Market's back in positive territory. Of course, we got Fast Market at 11. Larry Pesavento, Steve Rhodes, Dave White, Tom O'Brien, all this afternoon. I appreciate you starting the day with me, folks. We got S&Ps up by 5 as we wrap it up. NASDAQ 100 up by 36. And you're looking at Dow positive by about 7 points right now. Stay tuned, folks. We got our man Basil Chapman coming up next with the Tiger Technicians Hour. We'll be right back.